Hey, it's Mike over at Cross Country Mortgage. It's Monday morning. It's time for your Monday morning mortgage update for the week of March the 31st, the last day in March, headed into April. Big jobs week this week. Always the first week in every month. We come out with a lot of jobs data, and we'll be paying a lot of attention to that. But first, let's talk about what happened last week, what's going to happen this week. I always try to give you insight about the economy from a mortgage perspective. So you're going out and making the decisions to buy or sell a house, you have some knowledge behind those decisions. So last week, what happened? Well, let's just look at the chart so you can see what happened. This is a trading of mortgage-backed securities on the bond market. It's a 3-month evaluation of what's been happening. You look at the left side, that's December 30th. You look at the right side, that's today. And you can see today we're seeing a red candlestick. And that means that money, ever so slightly, is flowing out of the bond market, and mortgage rates kind of ticked up a little bit this morning. But let's look at what happened last week. On Monday of last week, a big shift in the market. A lot of money flowed out of that bond market, and that's what we see with those red candlestick bars. And then it continued in Tuesday and Wednesday and Thursday. But then Friday, all of the money that went out all came back in, and we ended the week the same, no change to mortgage rates. That's the pricing on the back end. So what's this coming week look like? Well, I want to show you a perspective really what's been happening with mortgage rates. I just changed the screen here. This is a live feed showing the trading of mortgage-backed securities in the bond market, which is where mortgage rates are determined. And if you look at the left side here, you can see this is all the way back to October of 2023, and the right side is today. And look at how low this portion of the mortgage-backed securities trading was in October of 2023. Put this in perspective, rates were over 8.25% on a 30-year fixed. That's what we were quoting. And look at the improvement we've seen since then, where today we're quoting under 7% on a 30-year fixed. So quite an improvement. And I think it's important that we share that perspective with our clients. You know, I get 2 questions from buyers. What are the rates and how much money is it going to cost me? And when I ask them about rates, when they ask me about rates, I say, what's important to you about the rate? And they always say the payment. So really the rate's not that important. It's what they're going to pay every month and how much money is it going to cost them to buy a house. And I think that's what we need to focus on. And what this graph shows you, and when I show this to all my clients, it shows them the perspective that we've really improved on those mortgage rates. The market is absolutely trending to better mortgage rates in the future. Obviously, we've seen a lot of volatility in between. And you know that saying, don't try to time the market, spend time in it. And if people would have bought houses in the last year and a half, they absolutely would have gained equity in their properties because values are improving. They're not going down. They're actually getting stronger. We may see prices come down, but values are not. And there's a difference between price and value. And if you want to have some perspective on that, just give me a call. So what are we looking at this week? Really 2 things that are focusing on is tariffs and jobs. So why tariffs? So the Trump administration, since day one, has put tariffs out there, has launched tariffs that said, look, we're going to use these as negotiating tools. We're going to use these to get what we want, but we're also going to use these tariffs to even the playing field, to bring jobs back to the economy. So it's not just a threat. It's not just something Trump's doing just to be a jerk, if you will. He really wants to bring jobs back to the economy. That is the message that he's sending out. Depending on what news outlet you pay attention to, you're going to get that different perspective. But you know, that's the overall message that they're giving. We're going to see if that's going to work, obviously. How is that going to impact the market this week? Well, Wednesday is April 2nd, and it's kind of Independence Day, if you will, for these tariffs, because the Trump administration said this is when they're going to push the button. This is when they're going to implement these tariffs. And time will tell if this is going to work. It's an experiment. It's a gamble, obviously. And the businesses and the companies and the economists are really trying to hedge what's going to happen in the economy based on these tariffs. And so we've seen a lot of movement up to this Wednesday date, but we're going to see how the market's going to react on the 2nd. The second thing is jobs. First week of every month is always jobs data. We get income, unemployment, jobless claims, new jobs added to the economy, all of that stuff starting tomorrow, ending Friday. Look, if we see a strengthening economy, more jobs added, lower unemployment, then that's bad for mortgage rates. That means that the economy is looking bright and mortgage rates will actually go up. If we see weaker jobs added, an increasing unemployment rate, then lower income, then we're going to have signs that the economy's not looking good in the future, and that'll be positive for mortgage rates. So the jobs that are supposed to be added, about 120,000-ish, if we see those less than that, even below 100,000 jobs added, then that's going to be really good for mortgage rates. Anything above that, 130, 150 range, not going to be good for mortgage rates. So we're paying a lot of attention to that number. We expect the unemployment rate to tick up just 0.1%. And so paying a lot of attention starting tomorrow, every day this week. Wednesday's a big day with the tariffs. We're floating into these days, but we're very, very cautious to lock if we see some changes. If you have any questions about rates, about how this is going to impact your mortgage payment, don't hesitate to give me a call. I am a mortgage broker, a mortgage loan officer, and I'd be more than happy to give you any insight, help you in any way. If you know somebody who could benefit from this video, please forward it to them. If you have any comments, I'd love to hear them. Have a productive, great week, and we'll talk to you next week. Bye-bye.